Let's talk to Ronnie Chopra. He is the Chief Market Strategist for Knightsbridge Trading Academy. Very good morning to you,
Good morning.
Ronnie. Right, 3 thoughts-provoking slides to go through. Let's kick off with the first one. Barclays Bank PLC due to report this week. You've been a bull of this stock for some while now. You're a contrarian investor. What are your latest thoughts?
Oh yes, as you say, they have results out on Thursday. The shares have not really done that well recently.
Yeah.
I mean, with all the other financials. But what attracts me to this is that there's that activist investor who has 5%, and he's not going to hang around as such, and he's going to make things happen. So with the shares reporting on Thursday, I expect there to be some positive news. I think under £2 they offer great value, especially when compared with US financials that are rated far more highly. Looking further ahead, these are on a price-earnings ratio of 8 or 9, which is extremely attractive for a company like Barclays, well-known brand, global company. It's also a major beneficiary of the weak pound, especially against the US dollar.
Yep.
And as we hover around the 130 mark, all the profits from the US, when converted into sterling, means that there's a lot more pounds. So there are some attractive qualities. Also, if Barclays don't get their act together, Ed Bramson, with his 5% stake, is going to make things happen. We heard rumours that they were possibly in merger discussions with Standard Chartered. Then it could be other banks. We've recently seen a fairly sharp rise in Deutsche Bank, which I've mentioned in the past.
Yep.
And I wrote an article about them as well about 2-3 weeks ago when they were around the 10. Actually, they went down to like just under €9. And they're now trading, I think, above 10.50. So they've picked up somewhat. And I don't know if a German, UK-centric massive bank, these two laggards of 2017, if they come together, or if one of the large US financials, the likes of Bank America or Citigroup, that were also touted as predators back in the early 2000s, when Barclays was trading at £7-8 a share. There were rumours of a £10 bid. You probably remember as well.
Yep.
Obviously, Barclays is a completely different entity today because it's come out of Africa and it's streamlined its business. But they have some very valuable assets, and at this current price, and with the FTSE around the 7,000 mark, and these hovering below £2, I think for those that are brave.
Sorry, FTSE is 7,700.
Oh, I apologise. Yes, of course, 7,700. The shares below £2 offer a lot of potential.
Okay.
And also, sorry, if we do get a rate hike on Thursday,
Yep,
which is like
banks.
a 50-50 chance, then that is good for the banks, and that should also act as a catalyst in driving the share price higher.
Well, I think the market probability of a rate rise is nearer 90% on Thursday. Sorry, Wednesday, big pardon.
Thursday.
Thursday.
Yeah, it's. I'd say it's 50-50. But yeah, we shall see.
We shall see. I'm not betting on that, I hasten to add. Okay, let's move on to some crypto. Wow, that's a horrible looking chart. If you didn't know what that was, you'd be a seller, wouldn't you?
But then if you go back a couple of years, these were a lot lower than where they are now. It's, as we know, Bitcoin, which is the major cryptocurrency.
Down 58% first 6 months, the worst performing asset class.
Well, I think that last December, January, cryptocurrencies were all over the news. No one knew anything about them. And that was like the kiss of death. It was a bit like the Rockefeller situation back in 1929 with the stock market crash. But the thing that attracts me now to some of these cryptos is obviously they're down sharply. I mean, this one from $1,400 is now hovering around $450, is the fact that Larry Fink of BlackRock, my alma mater of years gone by, has said that they may start to offer cryptocurrencies to their investors. Now, that's a big game changer. As we know, BlackRock is the biggest asset manager in the world. And if they start to do that, then it's going to make the likes of Ethereum a more attractive investment proposition. And as you know, I prefer to look at things when they've come down somewhat.
Yep.
The art of contrarian thinking.
Absolutely.
And as we can see in the last few weeks, they're kind of
Trying
stabilising.
to base.
Yeah, there's a kind of a base there, isn't there, around this 450 mark. And I think with Larry Fink, with his interest in cryptocurrencies, I think it kind of highlights cryptos, and it makes them attractive. I think at this price, that there's obviously that attraction of diversifying one's portfolio and investing in something slightly different, especially if markets come off, then people will be looking at the likes of cryptocurrencies and the whole way that the banking system works, because there is a limited supply of cryptos. And at the moment, the market cap of all the cryptos, including Bitcoin, which everyone kind of has heard about, is still less than the market cap of large US companies. So you have all the cryptos under, I forget what the total market cap is, which I should really know. But, you know, they're off like 70, 75%. And then I think that at this kind of level, you know, don't put your house on it, but perhaps buy
Put them on the back book. Okay, well, let's wrap up with the last slide. Foxtons, the estate agents, what's your thoughts there?
Yeah, well, they had results out yesterday, and the shares, I think, closed up 9% higher. Fine, 9% when they're only trading around 50 pence doesn't mean much. But having said that, 9% is still 9%.
Yeah.
Now, Foxtons a few years ago, those that are in London know about Foxtons with their green minis and their sales executives with their plummy accents and their relatively high fees. But they've started to pick up, and in today's FT as well, there's some positive noises. Obviously, we know that the London property market is in the doldrums at the moment. Some areas down 10, 15% from the peak. And thanks to George Osborne with his ludicrous take on stamp duty, he's kind of ensured that sales of property in London have almost come to a standstill. It was more of a populist vote. Now, with the weak pound, again, I reiterate the weak pound, especially against the US dollar, you will have wealthy Americans or Russians, Indians, Chinese, or maybe not so much Russians because they want to leave London now, but the weak pound, obviously, if the property market in central London is down 15, 20%, and sterling's trading around the $1.30 mark, it obviously entices buyers. And with the uncertainty surrounding Brexit at the moment, that there could be a little bit of an upsurge in possible foreign buyers coming back into London. But having said that, it's not just the buyer's market, it's the rental market that is relatively strong. So they have that revenue stream, and so, you know, they're doing well on that front. But also with the likes of Foxtons, they're one of the stronger, well-known brands in London. Yep. They're doing better than their competitors, obviously brand awareness, etc. And the fact that they're languishing at 80, 90% off their high of 3-4 years ago when they were trading close to £4 a share. Again, one of those contrarian stocks, and they picked up 9% yesterday. There were some asset managers that picked up shares, and that's why they had a little bit of a rally. And I noticed this morning they're up as well.
Well, on that note, in the FT at the weekend, it said reasons to love your estate agent. So on that note, Ronnie, thank you very much indeed.
Thank you.